Before we start this video, do like and subscribe to our channel and not miss on any updates.
Hello dear students. So we are now going to begin our discussion with the recently released RTP for the September 25 examination. Very, very important part of your study is going to be the completion of your revision test papers. I believe very strongly that by far what you have done is part by part every topic you must have taken and studied it separately. But yes, RTP is one of those exercises where you will get an understanding that when entire subject comes to you together, will you be able to tackle? Will you be able to remember everything properly? Will you be able to quickly recollect and give the answers for different topics taken together? So this is something very, very important as a part of your preparation. Also understand RTP's framework, okay, because you'll be going across for the first time. It is going to be that you will be having all the topics being covered, okay, from everywhere one question will be discussed. This is the exact way for you to understand whether the individual topics that you studied, the revision that you have done, when the questions come from all the different places, will you be able to process it correctly or not? So this is very, very important. All right. So with this, let us get started with our preparation or with our discussion of RTP for the September 25 examination. So the paper 5, Auditing and Ethics. Okay. The RTP, which is available on the Institute portal, we'll be discussing now in detail. With this, if you have really studied well, you will get good confidence and you will have the kind of belief that, yes, I'll be able to recollect and write properly. Okay. One more important thing is, this will also give you an awareness of how the questions will be drafted, how they'll be, a frame, a simple question, how in a complicated manner it can be given, but the end answer will be very simple. If you remember in the course of discussion, I always keep telling that the questions will be very straightforward, but there's so much of story behind it, they'll create it. And finally, what they ask is a very simple theoretical question. So in this RTP, you'll get an exposure to those type of questions also, where you'll see that they've given a big story behind, but the liner is very simple. The question that they're asking is very straightforward and direct. All right. So with this, let us get started with our discussion of the RTP September 25 examination. All right. So you have the paper 5, Auditing and Ethics. All right. So here you'll be having first the MCQ based case scenario questions. Okay. Based on case scenario, all the MCQs will be discussed. There's one MCQ being like that. Then you have the general MCQ. All right. And then we are going to have questions from every topic. How the flow of this session is going to be is that I'll read the question. Okay, I'll give the entire understanding about it and also the main framework of what has to be written. Okay, based on that, you'll have the answers available with you. You can cross-check and see whether the way we have discussed with is it going to be understandable and you'll be able to write it correctly. In audit, the major problem is you should be able to understand for what question which answer has to be written. Because you know the content, you know the concept perfectly. But in the exam, the way the question is framed, you will not realize that this answer has to be written for that question. That's a big problem. Okay, so these all exercises will help you come out of that problem and you'll be able to face exam perfectly. All right, so let's take up the first one. Okay, the first is multiple case scenario or multiple choice questions on the case scenario basis. So it is Mohan and Associates were offered the statutory audit of semi-private limited for the financial year 24-25. In line with professional requirement, the firm communicated with the outgoing auditor, Veer and Company, to inquire whether there was any professional or other reason that would preclude them from accepting the appointment. So there has been an outgoing auditor and a new auditor coming in. So the question is, the outgoing auditor has to be informed by the incoming auditor if there is any reason that they should not be accepting it or precluded with it. Should I accept the engagement or not? Okay, there is a requirement by professional ethics itself that you have to communicate to the outgoing auditor before you accept the appointment. However, no response was received from Veer and Company for the same. That means the outgoing auditor has not given reply to this incoming auditor, that is Mohan and Associates. During the audit, Mr. A, a partner of Mohan and Associates, relied solely on the management representation letter to support the accounting treatment of certain tax matters that were under appeal, and no additional audit procedures were performed to verify the appropriateness of management's treatment of these matters in the financial statement, which may raise concern regarding sufficiency and appropriateness of the audit evidence. So there is some doubt regarding the sufficiency and appropriateness of evidence. Okay. Even then, he's simply relying on management representation letter and not carrying on any further audit procedure. So when there is a doubt, there is a reason that You should question more and more, perform more and more procedures, and come out of this problem of having any kind of doubt. All right. So these are all where you believe you don't have sufficient appropriate evidences. Okay. Then, as Semi-Private Limited has recently appointed a new accountant who lacked adequate knowledge of accounting standards applicable to the company, the management requested Mr. A to assist in accounting and bookkeeping. Now, you know it very well that a chartered accountant in practice who is going to be the auditor of that particular business cannot provide bookkeeping services for the same business. The reason is here, obviously, you cannot check what you have done. All right. So, a thread that we discuss here is very simple. You all must be knowing it. It is self-review thread that comes in. Okay. So, the same thing is here, book services. However, this is the correct thing what Mr. A has done. He has declined the request, recognizing that providing such a service would impair the independence of the auditor. Meanwhile, Mr. Raj, an investor in Semi-Private Limited, placed full reliance on the audited financial statements, believing that they indicated a strong financial position. He assumed that the audit guaranteed a safety of his investment without any risk of loss. Now, this is something not acceptable because we know audit does not provide absolute assurance. Audit only provides a reasonable assurance. Correct? So basically, you are believing that they're absolutely correct, strong financial position, and based on that investing, not a correct way. While finalizing the audit documentation, Mr. A prepared the working papers in physical form, okay, under the belief that paper documentation was mandatory. This also is very clearly understood. Working papers only in physical form is not mandatory. So SA 230, when you go through, you will realize that whether you maintain electronic media or you maintain physical. Okay, both are acceptable. So there is 230 which talks about it very clearly. Okay, now based on the above facts, answer the following questions. The previous auditor, Veer and Company, did not reply to communication of Mohan and Associates, which fundamental principle of professional ethics is not followed by them. Obviously, it is professional behavior because when you are communicating to the previous auditor, it is his professional duty to reply back to this. But did he do it? No. So the answer here is professional behavior. Okay, then. The auditor did not carry out any other audit procedure to justify management's treatment of the said tax matters and appear in financial statements, which is lacking on the part of auditor in such a situation. So basically, I told you when you know very well that there are some kind of, still some doubts in your mind, and even then we are relying on management's treatment. Okay, whatever they have done and representations are relied upon, that means you're lacking professional skepticism. You are not raising questions. Okay, then. Mr. A was requested to provide accounting and bookkeeping service. This we have already discussed. The answer to that will be self-review threat. Okay, because bookkeeping services, okay, and audit together cannot be performed. Then after that, you have fourth one, that is Mr. Raj is confident in investment. Okay, this I told you already that audit does not provide absolute assurance. Audit only provides a reasonable assurance that the financial statements are free from material misstatement. So here it is, you can see very clearly. Audited financial statement provide absolute assurance. It is wrong. Audited financial statement provide a reasonable assurance. It does not guarantee. So answer is B. All right then. After that, you have Mr. A was preparing the documents and audit file in physical paper form, believing that it is compulsory to do so. Wrong. SA 230 provides both. You can keep it physical as well as electronic. So you can see here the understanding is incorrect. Audit file should be kept in both physical and should be kept in both. No, this is wrong. Audit file should be kept only in physical form. Wrong. Audit file may be kept in physical or electronic form. The answer is correct. C is correct. Okay. Then moving on to the next one, we have general MCQs now. Okay. While auditing Happy Private Limited, CAM reviews a large number of invoices collected by the audit team. However, noticing that only a few have third-party confirmation, CAM reminds the team that simply having more documents doesn't ensure strong audit evidence and explain that reliability or quality matters too. What CAM is trying to explain in the given situation. Now, we already discussed as a part of SA 500 that whenever you obtain audit evidences, they have to be both sufficient as well as appropriate. Meaning this, sufficiency will talk about quantum, that is quantity. Appropriateness will talk about quality. So more number of evidences does not mean that it is quality and it is considered to be what is required for giving an opinion. All right. So we have to focus on both quantity as well as quality. So auditor is trying to tell here, or maybe it is understandable that you have to check for quantity and quality, sufficiency and appropriateness. Okay. So it's trying to explain that reliability or quality also matters. So only having more is not enough. You can look at this. Sufficiency relates to quality. Appropriate this is wrong because sufficiency refers to quantity. Internal documents are always sufficient, appropriate, wrong. When you read at reliability, you know that external evidences are more reliable than internal. Internal documents could be reliable if internal controls are good. Correct? Then more documents means better evidence. No, if you have thousands and if you don't have a quality evidence, then in that case also it is not working. Sufficiency refers to quantity, appropriate refers to quality. This is the answer. Because in 500 we discuss the concept of sufficiency and appropriateness. Sufficiency is quantity, appropriateness is quality. Clear? Then seventh one. As per SA 560, when after the date of auditor's report, but before the date of financial statements are issued, the fact become known to the auditor that, had it been known at the date of auditor's report, may have caused the auditor to amend the auditor's report, the auditor shall. That means if any fact has been become known and he gets to know about it, what will he do? Obviously, what he has to do is to discuss this matter with whom? Management. Okay, and check whether if any amendment is required. So we discuss in 560 two situations. All the events that became known to the auditor from the date of financial statement to the date of auditor's report. And second is the facts that became known to the auditor after the date of auditor's report. So here are two possibilities. One, financial statements are issued, one, financial statements are not issued. So in this case, if you look at it, financial statements are already issued. So you discuss first with the management and see if there is any kind of amendment required and then take a further course of action. So they're saying modify the opinion in accordance with 705 and provide. No, not required. They have not told anywhere it requires modification. Discuss the matter with the management, determine whether financial statement need amendments. This is the step that you do. Notify shareholders directly, no. Withdraw from engagement, no, obviously not. The answer is B. Okay, then. Supriya has taken a loan from a bank by pledging her NSC, National Savings Certificate, which is eligible for surrender. The loan account currently shows no sign of repayment delay, and the bank confirms that an adequate margin is available in the account. However, the loan has technically become overdue. How should the bank classify this loan? Now, NSCs are all those we have already discussed as a part of deemed NPA concept, where if you have taken any a loan on the basis of NSC or maybe IVP or KVPs, then in that case, if sufficient margin is available in that respective account, then the particular asset does not turn into NPA. Okay, even if it is overdue. Unless once the margin availability goes down, that means if it is not having sufficient margin and it is overdue, then in that case, obviously you transfer it to NPA. But here they're telling, though it is technically overdue, but is sufficient margin available? Yes. And because of adequate of margin available, you don't term it into NPA. So it will be not classified as NPA. The account must be classified as NPA. The answer is wrong. The account should be classified as an NPA since the adequate margin is available in the account. This is correct one. The account must be written off immediately. Wrong. The account classification depends on borrower repayment history. This is the correct one. Because this comes as a part of deemed NPA concept that we discussed. Okay? All right. Okay. Moving on further to descriptive questions now. So you can look at it. First topic is from the nature, objective, and scope. Okay. Mini and associate chartered accountants were appointed as the auditor of CA Limited, a construction company. During the audit, CA Mini, a partner of the firm, noticed the following. The company has several ongoing projects, but only selected revenues have been reported. Okay. Several expenses vouchers are either missing. Several vouchers are either missing or are handwritten and a lack of authorization. The company has changed its depreciation method from straight line method to WDV without adequate disclosure in the financial statements. Okay. These matters were brought to the attention of the management. However, management argued that these issues fall outside the auditor's scope of responsibility, whether contention of management is correct. Now, this is a very simple discussion that we do as a part of what is included in the scope of audit and what is not included in the scope of audit. So when you look at it, what is included, we know it very well that all the aspects are covered. All the aspects, the scope covers all the aspects of the entity. Second, it also discusses about sufficiency and appropriateness of the evidences obtained. And also proper presentation of the information, disclosure of the information is a part of the financial state, is a part of the audit. So these matters are brought to the notice of attention of the management. However, management argued that these issues fall outside the auditor scope. Okay, so that is not at all acceptable. Okay, they do not fall outside the scope. They are very much within the scope of the audit. Okay, so this is wrong. So management contention here is inappropriate. In fact, here the auditor's understanding. So basically here we talk about that all these things, okay? Whether it is scope includes all the areas, then completeness of information because sufficiency, appropriateness, more importantly, presentation disclosure, everything comes within the scope of audit. So the contention of management here is incorrect. Okay, then. Second one is audit strategy. Okay, planning and program. CA Rishu is appointed as an auditor of manufacturing company with a complex supply chain, multiple inventory locations, and recently introduced financial reporting requirements. Some article assistants and experts assigned for inventory verification are forming part of the team of CA Rishu. To ensure that audit risk is reduced to an acceptable low level, CA Rishu is focused on developing an effective and efficient audit plan. Explain the benefits of adequate audit planning in respect of in audit of financial statements. Now you can see this is exactly what I was telling, that all this part, all these things, okay, that you will see are all a story made up. Okay, it's all a scenario being discussed to you. But if you look at it, the main thing that they're questioning is here. Explain the benefits of adequate audit planning. So when we do SA 300, okay, planning and audit of financial statement, we discuss this concept in a very simple way. What are the benefits of audit planning? To devote the attention of the article assistants or maybe the team to appropriate areas. Then for proper coordination of work, allocating proper work to those team members who are competent, capable in this regard. Okay, whichever areas they're experts in, correct? Then dividing the team in such a manner that you'll be able to effectively, efficiently carry on the audit. Okay. Then when you talk about coordination of work with others like that of experts and all that. All right. So basically, decide facilitating nature, NTE of direction, supervision. Okay, and also planning the review of it. All right, when, how, and everything. Facilitating review procedures of in the course of audit. So all of these things are straight questions that we get from audit planning. Benefits of audit planning. All right. So that is 10th one. Now comes to 11th one, risk assessment and internal control. During the audit of Apex Limited, the auditor plans to place reliance on internal controls related to revenue recognition, which appears well designed based on preliminary assessment. Okay, so when we do preliminary assessment, he's telling that things are all good. However, due to materiality of revenue and the inherent risk of overstatement, the auditor concludes that more persuasive audit evidence is needed to evaluate the effectiveness of controls. To evaluate effectiveness of controls means basically to perform test of controls. Discuss the matters the auditor may consider in determining the extent of test of control. First of all, the basic understanding is they have done the preliminary assessment that they have found things are good, but because of the the kind of materiality revenue holds here, that is, it's a very, very important item to the financial statement, and the inherent risk that they have come across that there is overstatement in the revenue items and all, or the revenue numbers. They believe that the test of controls that they have to perform should be more extensive. So on what factors do they depend? It all depends upon the frequency at which the controls have been performed by the management, the length of time during the course of audit where the auditor is deciding to rely upon them, the kind of deviation that they've come across in the internal control system, okay, the expected rate of deviation that they're thinking of, okay, the rate of exceptions that they've come across, all right, then what are the other evidences they've obtained through other test of controls that they've performed. So all these things will take into account and decide to the level of extent of control testing that they are going to do. Okay, so that's again a theory question which comes from test of control. How do we perform more? SA 330, when you focus, you'll be able to receive this. Okay, then audit evidence. What is the question here? B Limited supplies Navy uniform across the country. The company has 5 warehouses at different locations throughout India and 4 warehouses at the borders. There's a very clear understanding. Okay, when borders and all come, understand they're going to discuss something about SA 501. Because that's the only place in the entire discussion that we have that we come across any examples of border. If you remember the class discussion, the example that I've given for impracticability of attending physical count is when they're at the borders, where there is a risk for the auditor to reach, impracticable for him to reach and all. Then in that case, how do you perform the physical count in those cases? Okay, so this hint is enough. The major stocks are generally supplied from the borders. World Limited appointed Mrs. KPM and Company to conduct its audit for financial year 24-25. Mr. P, partner of Mrs. KPM and Company, attended all physical inventory counting conducted throughout India, but could not attend the same at borders due to the unavoidable reason. Everywhere they have done, but borders they have not done. You are required to advise Mrs. KPM and Company how sufficient appropriate audit evidence regarding the existence and condition of inventory may be obtained. So this is the basic question, okay, that they're asking. And second is with regard to the case scenario that they have given there. The auditor is supposed to deal with the attendance when it is impractical. impracticable. So here reference to SA 501 compulsory. When you talk about audit evidence, specific consideration for selected items discusses about three things, okay, three components. One is going to be the existence and the condition of inventory, completeness of the claims and litigation, and presentation and disclosure of segment information. So there are three things. Now here, if you look at it, when you require to obtain sufficient appropriate evidence regarding existence and condition, okay, so you have to look into first, you have to look into the inspection of the management's instruction for the count procedures that they're put in place. Observe whether that count procedure has been actually conducted or not. Then you have to check for you actually do the test counts, or maybe you inspect some of the inventory. Okay, just check the inventories. Also perform the test count procedures. So inspection of inventory can be done. Okay, a part of inventory can be done, and also test counting can be done. Then whatever you get as the answer, that you have to correlate with the books and check if there's any discrepancy. That is the basic procedure that you apply in 501. Correct? Then, in case it is impracticable, okay, then you have to perform alternative audit procedures, like you can look into documentation or some other subsequent invoices. And if that is also not possible, then we have SA 705, which tells us to give modified opinion based on the given situation. Okay, you'll end up giving a modified opinion. All right, then. 13th one, CA Remy is appointed as the auditor of ASI Private Limited. During the audit, she decided to use various audit procedures to gather sufficient appropriate evidences such as, while verifying the fixed assets, she examined factory equipment and verified the inspection of each item, presence of each item. To verify the company's accounts receivable, she directly sent balance confirmation requests to the customers. CA Remy examined purchase invoices, contracts, and authorization records to assess the validity of payments and the approval. She independently performs bank reconciliation. She also checks the accuracy of depreciation by herself. Okay. Identify and explain the type of aforementioned audit procedure performed by CA Remy in accordance with the relevant essay. So this is simple. It is essay 500, where we discuss about the methods of performing the audit procedure, audit techniques basically. Okay. If you look at it, verifying fixed assets, factory equipment, it is nothing but it's inspection. Okay. Because inspection not only documentary records and all, but physical checking of assets is also considered to be inspection. To verify company's accounts receivable, she directly sends confirmation balance. This is external confirmation. CA Remy examined purchase invoice, contract, and authorization records. She examined, right? Again, this also is inspection only. Documentary records, when you examine, they are inspections. She independently performs the bank reconciliation that was originally carried out. This is the re-performance. Okay. She also checked the accuracy of depreciation calculation. This is taking the arithmetical accuracy of a transaction, so we call it to be a recalculation. Correct? And then you can give pointers under each what they need. Okay, so that is essay 500, audit techniques. So this is the question based on techniques. All right then. Okay, let's pick up on the next question. That is question number 14, audit of items of financial statement. Identify and explain the assertion that the auditor will check by the performing the following audit procedure. Identify and explain the assertion that the auditor will check by performing the following audit procedure. First, employee benefit expense recognized during the period relates to current accounting period only. Okay, relates to current accounting period only. That means when you look at the two accounting periods, when you're checking that this all belongs to the current accounting period only, that means what belongs here should not be taken over here, and what belongs to this accounting period should not be pushed here. Okay, so basically here what you're trying to check is whether cutoff has been checked correctly or not. Cutoff procedure. Employee benefit expense in respect of all personnel. All is the hint here. It is going to be completeness. An inventory held by the entity on behalf of another entity has not been recognized as a part of inventory. Belonging to others should not be a part of yours. That means you should have rights over it. Rights and obligation. Recorded sales represent goods which are ordered by valid customers and were dispatched and invoiced in the period. So basically whether these are real, that has occurred during the year. So occurrence. Okay. So basically these assertions you have to verify. They are verified. Identify and explain the assertion. You can identify, identification you have done, explanation you have to understand by the way it has been performed. Then audit documentation, CA Shilpi, the engagement partner at M and Associates, is assigned the audit of following two companies. Z Limited, a small family-run business with straightforward operations, minimal controls, and low transaction volume. Ted Limited, a large multinational corporation with complex operations, multiple subsidiaries, high transaction value. During audit planning stage, CA Shilpi highlights that the form, content, and extent of the audit documentation must be customized for each client based on specific factors. Discuss those factors: nature and size of entity, the kind of complexity in form, the kind of risk you have identified, okay, significance of those risks. Okay, so basically, they're all the tools, the audit methodology tools that have been used. Multiple factors are there that will help you decide that how you're going to document for two people. Okay, two different clients. It cannot be the same. There are multiple factors which will make different framework for each of the client to design their documentation. There is no one standardized format. Then completion and review. During the audit of Crystal Limited for the financial year ended 31st March 25, the auditor CAZ was in the process of finalizing the audit report dated 30th of May 25. The engagement partner emphasized that CAZ shall perform audit procedure designed to obtain appropriate evidence that all the events occurring between date of financial statements and the date of auditor's report that require adjustment or disclosure in the financial statements have been identified. Audit procedure in accordance with SA 560. Okay, but the auditor performed. All right. So very simple question, again a straightforward one. So here it is SA 560, subsequent events. Events occurring after the balance sheet date. Okay, it becomes a duty of the auditor to identify if there are events like that which are going to have an impact either to adjust or to make a disclosure in the financial statement that they are auditing. And if it has not been done properly by the management, obviously they'll move on for modification of the auditor's report. It is a responsibility of the auditor. So here they're telling what is the procedure performed to analyze if there is any kind of risk involved for any subsequent event to be present. So very simple, first you discuss with the management whether they have any procedures in place for the purpose of identifying such kind of events which are happening. Discuss with management TCWG. Okay, if all the events have been taken into account or they are aware of all the events. Okay, what are the procedures that they apply? Then you inspect the minutes books to understand all the discussions between management, TCWG, and the others to if there's any discussion regarding any of these matters after the date of auditors, after the date of balance sheet. Okay, then here you can also talk about, you can look at latest interim financial statements. So these are all the indications or for you to understand if there could be any event after the balance sheet date, okay, which requires any adjustments or disclosure. Okay, which is the responsibility of the management basically. But because of SA 560, we also have a responsibility to check whether they have been properly disclosed or not. And if not, obviously we go in for modification of the report. Then audit report we have auditor 17th one. Auditors do not always issue an unmodified opinion on the financial statement. In case where there are material misstatements or limitations in obtaining sufficient appropriate evidence, a modified opinion may be necessary. Discuss. A very simple question has been asked here. Okay, there are two types of modified audit opinion. Okay. Okay, and when you can issue, you have to explain the concept of materiality and pervasiveness. So, first of all, we don't look at immaterial item. So, for 3 modified opinions, we have qualified opinion, we have adverse opinion, and we have disclaimer of opinion. Correct? For qualified also, we require materiality. Adverse also material. This also should be material. Correct? For qualified, okay, 2 possibilities are there. One, you obtained sufficient appropriate evidence. Other, you have not obtained sufficient appropriate evidence. If you obtain sufficient appropriate evidence and they are material but not pervasive, or they are material and pervasive. If they are material but not pervasive, you end up giving a qualified opinion. If they are material and pervasive, you will give adverse opinion. Okay. If you have not obtained sufficient appropriate evidence, then in that case also 2. If you believe the possible impact of that would be material but not pervasive, you will end up giving a qualified opinion. But the possible effect of that would be material and pervasive, then you'll end up giving a disclaimer of opinion, which is as good as no opinion. Correct? And all this discussion happens in with standard SA 705. Modification to the opinion in the independent auditor's report. Clear? All right. Then special features, this they have given about partnership. So all the pointers about partnership is what we pick and write it. Telling the audit appointment was informal and not documented properly. No, the letter of appointment and the engagement letters have to be drafted in writing, signed, properly authorized, everything has to be done. The firm started a new business activity which is not covered. So we have to thoroughly go to the partnership deed and see that every particular has been covered there. Major financial decisions were made without proper records. No, you have to see that it takes into account mutual benefits, mutual interest of all the partners. You also have to look into profit sharing ratio. You have to look into whether division of profit is happening correctly or not. Whether any of these business decisions have not been prejudicial to the interest of any other partners. All of that is what you have to write here. So basically here they are talking about how do you do the audit of accounts of partnership firm. So all the points that you remember, you can just quote it here. But remember, letter of engagement should be in writing. Partnership deed has to be verified in detail. Any changes have to be checked whether they have been covered upon properly in the agreement. Okay. And then PSR, division of profits, all of that is going to be a major consideration. Okay. Then audit of banks, most of the time we have seen the questions are on deemed NPA. So as I always tell that questions are very, very important. And usually case study kinds of questions do come only from that part of NPA, that is deemed NPA part. So here also you can see they have been questioning about the agricultural crops that is there. We have the one crop season or two crop season, short duration crop, long duration crops. So that is one. And about the government guaranteed advances, which I again say very, very important for asset classification and income disclosure. Okay, income recognition. So Messrs. JKL and Associates, Chartered Accountant and Statutory Auditors of Messrs. IPS Bank Limited for the financial year 24-25. During the audit, they observed the following items included under interest income in the financial statements of the bank. An amount of 5 lakh relating to short-term crop loan where installment was overdue for one crop season. So we know we have two crops. We have short duration crop, long duration crop. So when you have a short-term crop, it has to be overdue for 2 crop season. Then you term it as NPA. So here basically it is one crop season. So one crop season means it is not to be classified as NPA. It can be recognized as an asset. So they observe following items included. So this is correct. This is correct thing the management has done. An amount of 7 lakh relating to an advance guaranteed equally by the government of India and the government of Tamil Nadu, where the installments have been overdue for more than 6 months. Government of Tamil Nadu and government of India. So this is central government, this is state government. Correct? We know central government advances, if they're guaranteed by central government, then those cannot be classified as NPA unless there is a revocation of their guarantee, repudiation. But state government, this concept does not apply. So here the concept has been checked very clearly. So you look at it, 7 lakhs. 50%, 3.5, 3.5. One is backed by central government guarantee, so this will continue to be a regular asset. Okay, that is standard asset. It is going to be classified as a normal asset. Income will be recognized. This will be deemed as NPA because it is overdue for more than 6 months. So is it crossing the 90 days limit? Yes. So it becomes what? NPA. All right. So here, state government advances, that is a Tamil Nadu guaranteed government guaranteed advance, will become NPA. But central government guaranteed advance will continue to be a standard asset and will be recognized as it is. But understand, it's only asset classification. Okay, income recognition will happen only on cash basis. So here, from the above facts and details, what should be the correct treatment of the interest income in the financial statements? State the amount that can also be recognized as interest income with appropriate reasoning. So here also you should understand that only classification will change, but income recognition will happen only on cash basis. Correct? Income recognition won't change. So here 7 will not get recorded, and 5 will get recorded. Okay. Then state the amount that can be recognized as income. Okay. Also determine amount to be classified as non-performing asset. So amount to be classified as non-performing asset is only 3.5. Okay. You should remember we have discussed this like in detail that this particular concept applies only for asset classification. Income recognition will still continue to be on cash basis if they are overdue for more than 6 months in the case of state government advances as well as central government advances. So only classification will be NPA and non-NPA, but recognition of income will happen for both the cases only on cash basis. Okay. Then, so this 5 lakh has to be recorded as income of the current year, which is correct, but 7 lakh should not be recorded, and out of which now 3.5 becomes NPA. Then ethics and terms of engagement. CA Rohit is conducting audit of Taste Limited, a food production company, for the last 2 years. Before commencing the audit for the year, he observed that the company has undergone a major shift in the product line by expanding to pharmaceuticals. Besides this, the company is now subject to new regulatory requirement. These developments were not present at the time of accepting the initial audit engagement. CA Rohit is of the view that there is no need to issue a new engagement letter. Examine whether the viewpoint. They're saying, besides this, the company is now subject to new regulatory requirements, these developments. So this basically here you have to give the reference to essay 210, agreeing the terms of audit engagement, wherein we discuss the concept of recurring audit. And we say in recurring audit, it is not every time required that you come up with a new engagement letter every time. Okay, so the existing engagement letter also can be continued. But if there is any kind of revision requirement in the engagement letter, then in that case, you have to redraft it. A fresh engagement letter will be recorded and it will be signed by again both the parties. So here you can see that the reasons where a revision is required is because there could be change in the senior management, there could be in the change of nature of business, there could be change in the regulatory framework. Okay, there could be a misunderstanding of terms and conditions given above, change in the terms of engagement of the current engagement. Okay. Then FRFs could have undergone a change. So a lot of things are there because of which revision would become required. So in this case, if you look at it, there has been a major shift of the product line. So there is a change in the business line, plus new regulatory requirements also are there. So in this case, is it required to revise the engagement? Yes. So here, as per SA 210, revision is required. So they have to draft a new engagement letter and again get agreed upon. By both auditor and the client. All right. So this was SA 210, the last question. All right. So you'll see here from all the different chapters, we have taken all the different questions. And basically, this gives you a complete 100% insight of all the different 11 chapters. And when all of them given together, are you able to process this or not? All right. So this is a thorough discussion of the RTP. Okay. And it is very, very important for the examination that you go through this. Okay. Please go through all the answers in which the institute has actually given and written the answers. This will give you a proper understanding because many students have a doubt in their mind. How are we required to present it? How are we required to write the answer? How to begin it? How to conclude it? So the entire doubt will go completely off. Once, I always recommend that you should do all the questions from the institute study material. Plus, if you look at the answers given here, that also is a very right approach of understanding how the answers are expected in the exam. Here, some answers might be too much in detail, also agreed because it's just taken from the material, but you should understand the framework in which how it flows. That's very, very important for the examination. All right. Yes. So with this, we conclude our discussion for the RTP September 25, CA Inter, the paper 5, Auditing and Ethics.